Hi and good day to all of you. Welcome to Scholars Choice. This is a small initiative from my side to provide you free lectures. The school-going students, UG as well as PG students, also the UPSC and various other state PSCs aspirants can subscribe and make use of these free lectures. Please connect me through Gmail and Telegram channel for any personal mentorship. The link will be given in the description box. So this is the first lecture from Scholars Choice. Please show your support through likes, comments and share and subscription to our channel. So let us start. On accounting. The basics of accounting. So, we shall learn the basics of accounting through a story. So, let me tell you a story. Let me tell the story through a bakery man. So, he is having a bakery and he is a baker. So, I'm telling he is having a bakery and he is a baker. Every aspect of this story is very important to understand about the basics of accounting. Here comes a man who is asking him for a cake and a kid who is asking him for some juice and a lady who is asking him a cup of coffee. So one day he is thinking how he would calculate how much he has earned. So for this purpose, a person who is an accountant comes to his help. So I'm telling there was a bakery and this person is a baker and every day a lot of people come to his bakery and at last, he would like to know how much he has earned till now. So, for this purpose is accounting. So, what is the meaning of accounting then? The meaning of accounting will be the accounting. It can be defined as the process of identifying, measuring, recording, communicating the required information relating to economic event of an organization to the interested users. So, we shall be going through the different word meaning of this definition. So, now we shall go to the aspects of accounting. So, what do you mean by the aspects of accounting? We had come through various terms of accounting in the definitions, right? What are the terms related to the accounting? The first term is economic event. Economic event, I had given some list of economic event. So, let me tell you about the economic event with the help of that story itself. The story of the bakery man. So, in his bakery, one day he was selling a cake, right? He was selling a cake, he was selling juices, he was selling coffee. There was a lot of items in his bakery. So, every day, not only one day, every day he would be selling a lot of items which was kept in his bakery. So, that is an economic event. So, an event is occurring, a sale is occurring. So, next which is the purchase. He is purchasing raw materials to make the items which should be sold in his bakery. Then he is making payments to that particular supplier who provided him the raw material. Then he is receiving the receipts, that payments, the amount for that particular items which he has sold in his bakery. So an economic event is occurring in a particular organization. So these are some of the list of economic event which is occurring in most of the organization. On all organization, these events will occur. Okay. Now next is about the identification, measurement, recording, communication of this economic event. So here is identification of a economic event. What is an identification? That means he identified that this particular cake was sold. Let me tell you about the any particular flavor cake was sold in his bakery. Next is measurement of the economic item. That means how much cake was sold. Is it 1, 2, 10, 20 cakes? How much was sold? The number of cakes that was sold. The number of juices that was sold. The number of coffees that was sold. So that is the measurement of an economic item. Next is the recording of the economic items. That means he is recording on daily basis. He is recording that this much cakes, this much the number. That means 10 cakes was sold on this day. 20 juices were sold. Then 50 coffees were sold. So like that, he is making a record for himself. That is means he is writing in books of records that particular events were there for a particular day. Then communication. Communication means here to the interested users. So who is interested to know about the bakery here? He himself, right? So a particular event was happened. Then he has identified that event. Then he has measured that event. He has recorded. That means in monetary terms, he has recorded that event. And let me tell you in particular, this must be or this will be in the chronological order. That means by date wise. It will be the date wise. Then to the interested, at last he would be knowing that how much he has sold. What was the items that he was procured from the supplier. Next is the organization. Organization here means it could be a sole proprietorship. That means here it's the bakery. Then it could be a partnership. So the bakery could be a partnership. It can be between 2 or more persons also. Then a cooperative society. Then municipality. So here we should note that the accounting is everywhere. There is a single place there that there will be no accounting. So we can look at our house itself. Though we don't maintain the books of accounts and all, but there is a matching of what we had, what is our income and what we had spent, right? So there is also accounting in our house. So everywhere there is accounting. Now, while telling you the identification, measurement, recording and communication, I told you about the interested users, right? So now, let me tell you who are the interested users. So for example, this bakery man who wished to get a loan for the expansion of his bakery. So the external user would be the banker, right? The banker who is providing him the loan. Not only the banker, there will be tax. If it is a big unit, there will be more tax. Then there will be auditing. Various people who would be interested in knowing the events what was occurred in the particular organization. So the interested users, not only the external users, there will be also internal users. So who are the internal users? The manager, the board of directors, then the vice president. So these persons would like to know what has happened in a particular financial year in an organization. So these are the aspects of accounting. Now I shall tell you about the scope of accounting. What is a scope? So where can we find this accounting? We can find financial accounting, cost accounting and management accounting. We can find financial accounting, cost accounting and management accounting. Financial accounting means which shows the financial position of the organization. Which shows the financial position of the organization. Cost account means what is the cost incurred to produce a particular items of the organization. What is the cost incurred? That means there will be labor cost, raw material cost, transportation cost. There will be different costs incurred to produce a particular item in an organization. So next is the management accounting. This is the combination of financial accounting as well as the cost accounting. So financial accounting plus cost accounting is the management accounting. So this is the just the basics I'm telling. I'm not explaining you in detail. If you want to explain this financial accounting, cost accounting and management accounting in detail, it would take more time. This is to just tell you that what is the basics in the accounting. So what is management accounting? Management accounting means the managers who would be seeing that what is the reports that may be made. That means purchase report, sales report. We had heard about these terms, right? So this is sales reports made. So the manager would be submitting in the front of the board of directors. So they will be reviewing the report and will make a decision whether to shut down this particular unit, whether to expand this particular unit. That all will be decided in the management accounting. So now I will be familiarizing you with the terminologies. The first terminology is the entity. Entity means the identifiable business enterprise. The identifiable business enterprise. So when it comes to our story, it is the bakery man's bakery. Okay? It is the baker's bakery. So that is the a particular organization. Next is the transaction. Transaction means an event involving some value between two entities. That means there will be there will be a sale or there will be a purchase made. So there will be a buyer and a seller always. That means that is the two entities, or two or more entities. Okay. So there is a transaction. There is an event which is occurring between two or more entities. Next is the asset. The assets means the resources which belongs to the bakery man. Okay, when it comes to our story. Next is the liability. See, when we tell about the assets, there is a lot to tell about the assets. There is fixed asset, there is current asset, everything. But for a time being, let me briefly tell you that is the resources which is belong to the enterprise. Next is about the liability. Liability means the obligation of an enterprise. When it comes to this bakery, when he wants to expand his bakery, he has to go for the loan. So when it comes to the banker, the loan given by the banker is the obligation of the bakery man. Next is the capital. Capital means the amount that he has invested for the first time. To start this bakery, what amount he has invested is the capital. Is termed as the capital. Next is the sales. Sales means the amount, the total revenue. Okay, total revenue from goods and services he has sold. The total revenue from goods and services he has sold. So how many cakes he has sold, how much he has received. So that is sales. Next is the purchase. Purchase means for making that cake, what all goods and services he has procured. That is the purchase. Next is the revenue. Revenue means the amount the business earned by selling the product to provide services like that. So whatever the amount that the bakery man has earned while selling his cake is his cakes. I mean the items which is in the bakery. I'm just telling you that cake, but there will be lot of items you know better than me. So the items that he sold and the amount he has received from his sales is the revenue. Next is the expenses. Expenses means the cost incurred by a businessman, the process of earning profit, earning revenue. So while earning revenue, he has incurred some cost, right? He has procured raw material to make items in the bakery. So like that, whatever cost he has incurred to make a revenue, make a single penny, he could be regarded as the expenses. Next is the expenditure. The spending money or incurring a liability for a benefit or services or a property received. So whatever amount that he is spending to provide a service, to get a benefit, anything could be regarded as the expenditure. So we know every single penny counts when it comes to the accounting. Every single penny. When we are spending 1 rupee on a particular item, that will be recorded in the books of accounts. The next term in this accounting is the profit. So what do we mean by the profit? Profit means the excess of revenue over the expenditure. So if he is making sales revenue more than what the cost has incurred for producing a product, is his profit. Next is the gain. Gain is regarded in the larger terms. Profit is only for the goods that the business enterprise is dealing with. So gain is in larger terms. It is also the something the revenue that is earned with the business transaction, but while selling his assets or making a larger investment like that, that is gain. Okay, but profit is only for the goods that the business enterprise is dealing with. Next is the loss. So if the profit is excess of revenue over the expense, then just the opposite, it is the excess of expense over the revenue. That means if his sales is less than what the cost has incurred for producing a product, it is regarded as the loss of the baker. Next is the voucher. Voucher is the bill, that is the documentary evidence in support of the transaction. It is bill, that means he is giving a bill. Shop here the shopkeeper will give the customer a bill, but the same copy he will keep with him. The same copy of the same bill will be kept with the baker itself. In future, it is for the further further evidence. That means he is keeping as a evidence in future. For the future, he is keeping it as a evidence. That means he, on a particular day, particular customer came and he bought this much worth of cakes or something like that. So for which he has an evidence. So he should know, right, where the money has gone, where from where he got his money. For that purpose, this voucher is kept. Next is the goods. Goods here means these all are the goods that this baker is dealing with. That means the products on which the business is dealing. That is the goods. These cakes, the coffees, the tea, if it is the snacks, the juices, everything is regarded as goods. Next is the drawings. Drawings means it is the withdrawal of money or goods by the owner from the business for his personal use. That means he is a baker and he is taking cake for his child's birthday from his bakery. It is regarded as his withdrawal, his drawings. It is not sales. It doesn't come under sales. Rather, it is reduced. It will be reducing the sales, right? There will be no income for this cakes that he has taken away. Okay, so it is regarded as drawings. Next is the stock. Stock means what is left over, what is in our hand after completing a particular day. It can be a month, it can be an year as well. So what goods, raw materials, everything which is left over after a particular time, it is the stock. Next is the debtor. Debtor is the person or an entity who owe to the enterprise an amount for buying goods and services from the enterprise. It on credit. Okay, here it is on credit. No cash is paid on that particular time. While happening a transaction, there is no cash being paid. The transaction was on credit. The word credit should be noted in your mind. So it is the transaction is on credit basis. Next is the creditor. Creditor means to whom the person or entity who have to be paid by the enterprise. That means here if there is a supplier for this baker and he has to pay to the supplier in future, this supplier is regarded as his creditor. Hope you understand this much, and you can expect more videos in future. Please like, share and comment on the video. Subscribe to the channel. There will be more videos on different subjects which will be useful for you all. And thanks for watching my video, and please subscribe to the channel. You can connect me through the Telegram or Gmail me for any personal mentorship. I'm happy to provide that. Please stay connected. So stay tuned for the next video which is coming up. Thank you so much.